Backpack is on every blockchain you could imagine. Bitcoin, Ethereum, Solana, Optimism, Arbitrum, Base, Plasma, you name it. We're supporting it. And that's part of what makes a great wallet and exchange product.
David's got a backpack, oh, it's magic for sure. It's got zippers full of secrets and a crypto allure. He's a live streaming hero on a worldwide tour, unlocking the future and so much more. David's on a quest, oh.
Thank you very much for doing this again, sir.
Yeah, thank you for having me.
Armani Ferrante, is that right? Ferrante?
Perfect.
Okay, sorry about that.
You give it a little Italian flair if you want to roll the tongue a bit.
That's nice. And you are the co-founder and CEO of Backpack. Am I still on good? Okay.
That's accurate.
That's accurate. So we had an interview earlier this year. I really enjoyed it. And yeah, it was great hearing about your history and everything like that. Those of you who haven't seen it, please watch it. We went into a lot of details about how you got started, what you were doing with Ethereum, and then moving into Solana. So we don't want to retread any of that. However, I do want to start with a kind of a more, philosophical question, which is, while preparing for this interview, I was thinking a lot about what a backpack means. It helps that I was traveling as well and how important it is. I think that's probably true for most people in the modern world. Like the backpack is kind of this singular item that does so much. And I was just wondering, obviously your company's named Backpack, and I think it's a marvelous name. You must have been thinking about this intentionality well before for this, but what does like a backpack mean to you? Why did you choose that name?
So the first product that we built was a self-custodial wallet. The wallet is a simple metaphor, an accurate metaphor for a lot of what the first generation of key management software did in crypto. You can self-custody Bitcoin. You had the introduction of hardware wallets. But slowly over time, crypto became much more rich. New protocols were introduced, whether they were new L1s like Ethereum, new asset classes like NFTs, or burgeoning on-chain, economies in the whole rich world of decentralized finance. And very quickly, the wallet became much more than just a place to hold tokens. It became a place to access new worlds, whether it's Bitcoin, Ethereum, Solana, or one of the many new next generation blockchain ecosystems that are emerging all around the world. And so when we started the company and we decided to build what became the Backpack wallet, we felt that the concept of a wallet was too restrictive. It was too limiting. And, the backpack is such a elegant metaphor to describe something that's much more versatile, something that's much more adventurous, something that you can take, whether it's, a business trip to Korea, or whether you're climbing Mount Fuji here in Tokyo, or whether you're just going to school or going to university and studying to get a degree. No matter what it is, no matter where you're going, no matter who you are, the backpack is this, fundamental tool to take with you to achieve whatever it is that you want to achieve. And it just felt like an appropriate evolution from not just a wallet, but something that became so much more. And if you layer on top of this one's perpetual love for MMORPGs and things like World of Warcraft and RuneScape,
of course.
You very quickly end up in inventory views, and the name Backpack very quickly becomes more and more appropriate for one's, view of the world. So in any case, there's a bunch of ways that you can slice it, but I do think it is a beautiful metaphor that articulates a lot of what the product is trying to achieve.
And it seems to me like you basically had in your mind at least a kind of roadmap of where you wanted the product to go, starting with something, I would say kind of simple, like a crypto wallet, traditional crypto wallet, but knowing that it was going to go to encompass a lot more. Is that right?
That's certainly right. I mean, I think we started with this ambition to, reimagine what the next evolution of wallets will look like. Obviously, fast forwarding from, early 22 when we started the wallet to, the end of 22 when FTX collapsed, the world changed pretty significantly. The industry changed, our personal lives changed quite significantly. The business changed. We're kind of, I guess, notorious for having lost the majority of our working capital on that exchange. And although we knew it would be, much more than just a wallet, we never anticipated from the beginning that we would venture into the exchange landscape.
Oh, really? That was going to be my next question.
And that really was a matter of circumstance. With the collapse of FTX, it really felt at the time that it was really an indictment of not necessarily the perils of crypto, but it was an example of everything that is wrong with traditional financial systems, everything that crypto is originally meant to address, whether it's the 2008 financial crisis, the 1930s, or anything in between. There's numerous examples of this.
Yeah.
And so we felt like, when FTX collapsed, there was really just a duty for somebody to come in and reimagine how these systems are built, to take everything that makes crypto and DeFi and public blockchains so special, right? Things like, computational integrity, things like verifiability, things like being able to prove or attest to truth in a way where you don't have to trust the operators or the management team. You can simply, utilize the mathematics to prove whatever it is that you want to prove, and to apply those concepts to the context of a traditional financial institution.
Yeah.
And I think this concept, is something that crypto native people have understood for, I guess, the past, decade. But it's something that I think we've yet to really see in traditional finance. And, especially as we've seen this cycle, as, more and more of the traditional institutions get kind of attracted and interested in crypto, I think what we'll see is not only crypto assets become ubiquitous and permeate finance and we'll see market expansion on that dimension. But I also think that we'll see the technology, permeate kind of traditional finance as well, so that we can solve a lot of these issues to not only make a new asset class, but to also make more robust, financial primitives to just genuinely improve on these problems that have plagued finance more broadly for over 100 years.
Yeah, I agree with that, but I guess I'm slightly more inclined to pessimism, because I think there's a push and pull where crypto people, they start with that ethos of decentralization, and then they just get pulled over a little bit more because of the attractiveness of maybe the traditional system. And then there's reminders like the FTX collapse, and perhaps this cycle there will be a reminder further down the road. Hopefully not. But speaking of kind of the perils of traditional finance and how crypto can potentially improve upon them, you guys on your centralized product recently rolled out, or since we last talked, you rolled out proof of reserves, right?
That's correct.
Can you please describe what this is and how you've implemented it? Maybe how it's different than other so-called proof of reserves?
Yeah, that's a great question. So traditionally, companies or financial institutions would attest to things like financial statements, once a year, once a quarter. Maybe you have some crypto companies doing it, maybe as good as once a month. We felt like one of the really valuable aspects of crypto systems, or blockchains in particular, is, the concept of computational integrity, right? You can attest to a ledger and you can prove that ledger is correct. And so, when we set out to build the exchange, what we did was we looked at kind of, how do we actually rebuild one of these exchanges from scratch with this kind of real-time state integrity guarantee in mind.
Oh, really? From the beginning?
From the beginning.
Cool.
And so the way the exchange is built looks a lot like a blockchain. It kind of looks like a blockchain. It quacks like a blockchain. For all intents and purposes, it's a blockchain. Every order placement, every order cancel, every liquidation, every deposit, every withdrawal, it's signed with an ED25519 key pair. It's ordered in a global linear log of authenticated transactions, and it's deterministically replayed from the beginning of time up until today through a distributed set of validator clients.
Very cool.
To deterministically give you the state of the ledger at any given point in time. So for any kind of computer scientists out there, it kind of looks and feels a lot like a blockchain. It is a blockchain for all intents and purposes. And this was extremely important so that we could have really strong guarantees over every aspect of the system at any given time, so that we can not only have, privacy preserving, computational integrity guarantees amongst a permission validator set, but to also be able to publicly attest to the ledger and anchor it by, a public blockchain. And so at the end of each day, what we do is we package up the ledger, we create a zero knowledge proof, we make it public for the world to see, and we have namely an external kind of auditor, which everybody kind of knows and respects in the name of AutoSec, that takes that zero knowledge proof, checks it, and kind of verifies it for the entire world. Now, all the code's open source, it's public, you can verify it yourself. People just tend to not want to go run a bunch of cryptography on their own machine. But nevertheless, we do this not once a year, not once a quarter, not once a month. We do it every single day. And we have this state integrity guarantee all day, every day in real time with every single transaction. So from the beginning of time up until the present, the state of the ledger is, proven. And every single day that ledger is anchored to every public blockchain that we support on the exchange. And so not only do you have this really powerful proof over the state of the world, but you also have distributed control over the system itself, where namely every deposit, every withdrawal goes through not only a validator client, which is distributed across multiple machines, but also a multi-party computation for all assets that are being moved in and out of the system. And so today we run all of those validators ourselves. It's a private permission blockchain, but it's a very small step to take this architecture and give you a node, me a node, and somebody else another node, and that starts looking like a permissioned blockchain or a decentralized exchange by some definition of the word decentralized. So, I think I would like to say we're not a centralized exchange. A centralized exchange does, I think, a disservice to all the hard work that we put in to genuinely build trust minimization into, a regulated exchange product. But it's also not appropriate to call us a decentralized exchange either, because it also does a disservice for the folks that are genuinely censorship resistant, have global distribution, and are not simply co-located in a single data center. We are somewhere in the middle where the whole system is verifiable. It is indeed trust minimized, but it lacks, I would say censorship resistance, because that's not a design constraint that we're, opting to solve for. And so it's an interesting point in the design space with an interesting set of trade-offs, but I think that's what makes the product unique.
Yeah, I love that. And I mean, I think as things like Hyperliquid have shown, this kind of, what's it called? It's this spectrum from centralized to decentralized is probably going to get filled up with products depending on where you want them along the way. And you can move up and down depending where you are in that space. I just have a couple questions about this. So it's open source means someone could take the kind of the setup that you've made and adopt it to their own?
The zero knowledge proofs are open source. So you can take the proof that we publish every day,
Right.
and you can verify it yourself in a way that's uncorruptible.
Awesome. And I was just wondering, so like, for example, how would it, I'm not technically minded, but like, if let's say, God forbid, someone within your organization were to like embezzle money, something like that, how would that show up as like an invalid transaction? It just wouldn't, the balances wouldn't match, basically?
Yeah, it's a great question. So basically there's really three things that are proven with the zero knowledge proof. The first is simply that all of the balances that are sitting in all the wallets on every chain. So we have a page, backpack.exchange/reserves that you can go to, and you can see every single wallet and the actual breakdown of what assets are in each wallet.
Cool.
And so the first proof is that all of the cumulative sum of all of the tokens and all the wallets match the ledger that we publish. But that alone is not enough. There's a second proof that proves non-negativity, that there is no negative balances as part of that ledger. Because if there was negative balances, then you would be able to have
that's where it would show up.
And then there's a third proof, which is an account-specific inclusion proof, where you yourself can go in. You have private access to your own account, like your own bank account or your own exchange account, and you can prove via a Merkle inclusion proof that your kind of account balances are indeed included in the attestation. And so what this like distributed proof kind of relies on is everybody in the world does their own proof, checks their own branch, and if they detect any malfeasance, then they raise their hand and scream from the rooftops and say, hey, there's an issue here. And so all of those things come together to basically tell you that my balances are indeed here in these wallets as of this snapshot in time. And I can guarantee this by virtue of the zero knowledge proof. And so to the extent that there's any type of embezzlement or malfeasance of any sort, you would detect it by virtue of your money not being there.
Right. Yeah. And then you would have the proof to show that it indeed isn't there and that something's going wrong.
That's right. Yeah. And you combine this with, so there's two types of proofs. There's the proof that here's the ledger does match the wallets on chain. That's an extremely important proof. But there's a second proof that's extremely important, which is the state integrity proof, where one ought to also verify with source code that they can see, whether you have access to the source code or some, trusted third party, like a security auditor has access to the source code, that the source code doesn't have any mischief in it,
right,
like a backdoor, and that code indeed results in this ledger. And so you kind of need to do kind of both steps from the beginning of time up until today, matching kind of the chain. And so it's an end-to-end check in order to really thoroughly, verify what you want to, achieve.
Very, very cool. And basically, going back, I'm going to try to answer the second part of the question I asked, which is how is this different from a lot of the other proof systems I find? I feel like the biggest difference from what you've just told me is that most of the other proof systems that I know about, you still kind of have to take it on faith that their proof of reserves is real. This seems a little more rigorous, a little more deterministic, I would say.
I mean, it's hard to, I guess, answer that without knowing what specific proof systems you're referring to.
Other exchanges,
I see.
They say we have proof of reserves, and I haven't looked at all of them, but the ones that I've looked at, there still seems to be like you have to trust that.
I see.
A third party is saying we know we have these reserves.
I see.
But
I can't speak for kind of.
I'm not asking you to.
The other exchanges. I do think that we are probably the only, I guess, traditionally centralized exchange that has this state integrity kind of guarantee.
Yeah.
So it's like a blockchain type platform that the exchange is built on.
Yeah, as far as I know too. But I don't want you to get into any fights with anybody. So The other big thing that has changed since we last talked was Perpetuals. Most recently, you launched Perpetuals in Europe. That was a recent thing, pretty recent, right?
That's right. That's right.
So I'm assuming that this has to be MiCA compliant to some degree.
Yeah. So, MiCA is
MiCA.
a different kind of regulatory regime to MiFID, which is what we
Okay.
serve derivatives under. It's all kind of, I guess, tangentially related, but they are different regimes.
Okay. Could you educate me on what the difference is?
Yes.
MiCA is more on what, like stable coins or just
Yes,
what a digital asset is?
Yeah, exactly.
Okay.
Maybe more traditionally like spot markets. And,
I see.
And crypto more tangibly versus derivatives are contracts, things like perpetual futures that are synthetic representations of the underlying assets that they're trading. So it is a different product.
Are they sister organizations, or are they all under one roof? MiCA and MiFA?
Yeah, I mean, I don't know if sister is the right metaphor, but it's directionally correct. Yes.
Okay.
Yeah.
But what I was trying to ask is like, was it about the same level of complexity, difficulty, easiness to get Perpetuals working as compliant spot?
I don't know if I would say anything is necessarily more difficult than the other. It's certainly more rare.
Okay.
So currently, there's basically 2 exchanges in the world, as far as I'm aware, that have the ability to offer compliant, regulated perpetual futures in the EU. One is Kraken, and 2 is Backpack. I think a lot of exchanges have been looking at this and are probably going through the process. But as far as I'm aware, we're the only 2 exchanges currently live right now.
And to me, that would indicate that it's probably not very easy or somewhat difficult.
There's certainly nothing easy about building a regulated financial product. That's certainly true.
Does this mean that there are kind of like gray, unregulated perpetual offerings in Europe? Or basically like, oh, if you use this, it's your own kind of thing?
I mean, yes and no. I mean, I think there's certainly just generally a lot of gray stuff in the world.
Yeah.
It would be kind of preposterous to think that there wasn't.
Yeah.
There's nothing like in particular that comes to my mind.
Okay.
But I think the world's kind of wrapping its head around an ever kind of evolving regulatory regime in all the various parts of the world, which are all quite different and heterogeneous.
I mean, the U.S. has done a pretty good job of twisting arms all around the world to get pretty much every major exchange to not let U.S. users use them unless they're regulated. But so I was just wondering if Europe is also like going after like international exchanges and telling them to not allow European people onto their exchange if they don't, if they're unregulated. But yeah, I'm not sure. So you have Perpetuals in Europe. Do you also have them in Japan?
Currently, no, we don't. Yeah.
So in Europe and anywhere else?
Europe is our main kind of regulated derivatives product. I think Japan, we moved here over 2 years ago.
Yeah.
It's not a very common thing for a kid that's born and raised in California to pick up their kind of company and family and move over to this part of the world. But nevertheless, it's a pretty kind of, other than Tokyo just being a beautiful place and a super incredible place to live, as you know.
18 years.
Yeah, it's also just a really kind of exciting place to be for crypto, I think, over the next couple of years. We're seeing certainly a resurgence of just interest and activity, and it really feels like the country is about to go through a very U.S. Type moment with respect to crypto, where you have like the prime minister now going to crypto conferences and articulating a lot of positive things about crypto. You have maybe this anticipation of taxes going down from 55 to 20% as crypto gets reclassified from a currency into a new regime. And so I think Japan will be an exciting place. And so it's certainly something that we've been working on for the past 2 years at this point. And so we're not there yet, but it's really after Europe, the place that we have our sights on with respect to getting a regulated product up and running.
Yeah, I mean, I spoke with Haseeb Quresh at WebEx and then at Korea, and he had this amazing post after WebEx saying that he thought Japan was a quote unquote sleeping giant for crypto.
I mean, a lot of people forget that Japan was responsible for maybe on the order of over 50% of Bitcoin trading volume going back to 2017. Binance famously was, I guess, somewhat originated in Tokyo, right? There is a very large crypto native population here in one of the largest, economies in the world. And I mean, going back to like the Mt. Gox days, right?
Yeah.
When, the hacks happened and kind of regulation clamped down and folks left. And I'm quite optimistic that we'll see that return.
Yeah.
And so it's definitely a great place to be. And I think the post you're referring to really hit the nail on the head.
Yeah. I'm very excited for Japan to kind of take its place. And I mean, I think Hong Kong is kind of done, having been folded back into China. And so we've seen like an exodus out of there. So I think Japan can kind of make up a lot of lost ground. And I remember when all those crypto companies started to leave en masse when the tax laws became so onerous. So hopefully we'll see big changes. Right. So we are in this beautiful location here before a dinner or an event that you are co-hosting with 00. What's this event about? Why are you doing it?
I mean, I think generally it's fair to describe our role as ultimately support for great crypto projects, whether it's the wallets or the exchange. Our business ultimately relies on finding, supporting, and elevating the best projects that we can work with, built by the best people with the highest integrity, and that we think our users will love to support themselves. And I think 00 certainly is one of the projects that exemplifies that, where they are going after, I would argue, one of the hardest and most ambitious technical challenges in the crypto space today.
It's a physical world.
There's a lot of different folks that work at very different levels of the stack. And going down to the lowest level, down to the network infrastructure, is as ambitious, as challenging, and as exciting as it gets. To take the position that the internet is not enough and that the internet is too slow, and to reimagine how you can build crypto networks on a new network layer is, in my view, as exciting as it gets as an engineer. And so really kind of this event is just about kind of doing our best to support 00 in the region of Japan, and whether it's the wallet, the exchange, or our community more broadly. And so we just love to kind of work with the best projects and to help in whatever small way we can. And this is just one kind of, example of that support.
Very, very cool. I spoke with someone from 00. I'm blanking and terrible, but they were talking about some of the infrastructure kind of test nets they were doing in Europe. I don't think I asked at the time, but are there any lines in Japan at all?
Actually, that's a great question. I have no idea.
Okay, yeah, because I would love to know.
Yeah. It would make sense given, at least from the perspective of an exchange, how many, like Tokyo is really the epicenter of crypto exchanges. That's where in AWS Tokyo is kind of where everybody lives. That's where all the infrastructure lives. So I would imagine so, but that's a question for their team.
Yeah. We could ask that after this. And I was just a few more questions. First, so 00 would broadly be considered kind of a Solana, connected to Solana in some ways, although they're not officially at all. And when I spoke with them, they were like, "Yeah, we're looking at AI companies in Europe, or even gaming companies." So But it does seem like it's kind of comes out of Solana and this IDRL. I'm getting that right. Kind of ethos. Is Backpack still mostly like kind of focused on Solana?
I mean, I think you could categorize it in a very similar way that you would Double Zero, in the sense that there's certainly a lot of Solana heritage.
That's
Solana,
a better way of saying it.
yeah, I mean, Solana is just one of the most exciting, continues to be one of the most exciting projects in all crypto, in my view. But Backpack is on every blockchain you can imagine, right? Bitcoin, Ethereum, Solana, Optimism, Arbitrum, Base, Plasma, you name it. We're supporting it. And that's part of what makes a great wallet and exchange product. But yeah, Solana is always kind of like a second home, and continues to be, I guess, one of the projects I'm consistently most excited about.
Cool. What about Solana DATs? How do you feel about those? Kind of capturing the imagination right now. Mr. Kyle Samani is kind of drawing a lot of attention after Tom Lee and Michael Saylor had their turn. I would love to hear your views on DATs in general, and maybe Solana DATs in particular.
I mean, Kyle kind of speaks for himself, right? He's a force of nature.
He is.
I think it's very clear that there's a huge amount of appetite from traditional kind of liquidity pools to get more exposure to crypto, and to the extent that digital asset treasuries are the optimal vehicle as it currently exists to express that desire for more crypto exposure, then so be it. I mean, I think what he's doing with Forward Industries is quite compelling in the sense that they will probably be the first, as far as I'm aware, to actually not only take in the crypto, but also to actually go productively utilize it in the burgeoning crypto economy or market structure that's growing on Solana. And so I think the hypothesis or the thesis there is that will have a large reflexive effect. And I don't think we fully appreciate or understand the second order effects that will have. When you get more, the largest pools of capital in the world into the DAT, and then you take the capital from the DAT and then you put it into DeFi, and what flywheel that creates is, I think, pretty interesting. And so I think the biggest thing that will do is, I think, not only have a lot of like second order effects on, I guess you could speculate on price and inflows, but also just like education from that part of the world. And I think that does a lot to legitimize everything that's happening in DeFi today. And that, I think, is the big step forward. So I'm obviously super excited about, everything that Kyle's doing with, his DAT. And I think we'll see more here in Japan, actually, as well.
I was going to ask that. I mean, we have Bitcoin DATs, but what about Ethereum, Solana, other digital assets? Is there...
I mean, the short answer is yes. It's not my place to discuss it. I'll let those folks kind of have their moment, but I think we'll see more of it for sure.
Oh, nice. All right, last question. You can choose to not answer or answer, but I would say last week, leading up about a month, but definitely last week, there was a kind of a crescendo of Ethereum Solana drama about the exit queue. The Ethereum exit queue, which is like 45 days right now. And Ethereum aligned people and Solana aligned people were kind of going at each other on crypto Twitter, which was great. I think everyone wins in that case because you get to hear amazing arguments and some quite funny quips and whatnot. I was wondering if you had any thoughts on this broadly, or I could poke you on some particulars.
I wouldn't say I have any particularly intelligent comments on the exit queue. I mean, everybody loves a good crypto Twitter fight. Solana and Ethereum are just the best smart contract networks in the business, and so I agree. It's always good to see both ecosystems go at it, but it's always good to have a lively discourse. But I have nothing intelligent to say on the exit queue.
Okay. Well, thank you very much, sir. I really appreciate it. Thank you for the time.
Yeah, thank you very much.
All right, we're done.
Blockchain.